$26.5 billion, the largest foreign IPO in Nasdaq history. And it's not even an American company. It's SK Hynix, a South Korean memory maker that bet everything on one claim: NVIDIA's AI empire cannot run without it. But NVIDIA is engineering a way out. China is spending $100 billion to replace them both. How did a commodity chip company land at the center of AI's most dangerous power struggle? In February 1983, an industrial giant in South Korea quietly founded a new subsidiary in the city of Itaewon. They named it Hyundai Electronics. It did not start with grand plans for artificial intelligence. It started with basic, high-volume survival. By 1986, the factory floors in Itaewon were pumping out 64 kilobit dynamic random access memory, or DRAM. Inside these early cleanrooms, engineers chased yields on cheap, standard silicon. In the late 1990s, they scaled up to 256 kilobit chips. For decades, this was the company's identity. It was a classic commodity merchant, manufacturing the standardized memory blocks that populated cheap personal computers and office servers. This was a brutal, cyclical business. Margins were razor thin. Prices crashed without warning. SK Hynix operated as a low-tier player in a cutthroat market dominated by Samsung and Micron. It was a company built to grind out billions of identical, inexpensive parts. No one foresaw that this struggling commodity maker would eventually hold the keys to the world's most advanced computing infrastructure. In the early days of the artificial intelligence boom, computer scientists hit a physical wall. Ultra-fast graphics processing units, or GPUs, were capable of calculating billions of parameters at unprecedented speeds. But they spent valuable cycles idle, waiting for data to arrive. Standard memory chips like the DDR5 found in office servers route data across a system board through narrow, distant channels. Think of it as a two-lane road. The GPU was a massive engine, but it was starving for fuel. This gap, the memory bandwidth bottleneck, threatened to halt the advancement of large-scale AI models before they could truly begin. The solution required completely rewriting the rules of chip architecture. Instead of spreading memory chips flat across a motherboard, engineers decided to stack them vertically, like a high-density skyscraper. They connected these microscopic layers of silicon using through-silicon vias, microscopic vertical wire pathways drilled directly through the solid silicon. This entire vertical stack was then placed directly onto a thin silicon platform called an interposer, sitting mere millimeters away from the main processor die. By shortening the physical distance and widening the connection path, this high-precision architecture transformed that narrow two-lane road into a massive, multi-lane superhighway. Data no longer crawled across the circuit board. It flooded directly into the processor. This was high-bandwidth memory, or HBM. For a struggling manufacturer in South Korea, mastering this difficult, highly delicate packaging process allowed the company to move past cheap consumer electronics and build the indispensable gateway to machine intelligence. By 2026, SK Hynix controlled an estimated 50 to 62% of the global high-bandwidth memory market. The struggling commodity manufacturer had captured the ultimate crown in artificial intelligence, but this immense power rested on a razor-thin foundation. Almost all of this demand originated from a single, dominant giant, NVIDIA. NVIDIA's sheer hunger for high-performance silicon made it the kingmaker of the global tech industry. SK Hynix had positioned itself as the primary partner, securing key supply arrangements for the Blackwell line. This setup created unprecedented revenue. It also created extreme vulnerability. The billions of dollars flowing into the South Korean factories came from a remarkably narrow, high-value customer base. SK Hynix had effectively tied its corporate destiny to a single client's roadmap. It was a position of supreme market power, but one that left no room for error. If NVIDIA shifted its design, or if its market pull faltered, the entire structure would face immediate exposure. Seoul saw the American exchange as a strategic shield. This public listing was a calculated state-level maneuver. By anchoring South Korea's premier memory maker to Wall Street, the nation built a geopolitical bridge. This alliance bound American institutional capital directly to Korean industrial survival. As Washington tightened trade restrictions and Beijing subsidized its own silicon, South Korea positioned its technology champion between the two warring superpowers. Under the cover of corporate finance, SK Hynix secured vital geopolitical leverage. Any disruption to these clean rooms in Incheon would now trigger a direct crisis for American investors. The battle lines of the Silicon War had expanded from the factory floor to the trading desks of New York. NVIDIA, the very giant that crowned SK Hynix, is actively working to dismantle its own dependency. The Blackwell Ultra architecture introduces on-die memory pooling, a design change that reduces the need for external high-bandwidth memory stacks. Simultaneously, NVIDIA is qualifying Samsung and Micron to share the massive order volume. SK Hynix is becoming a replaceable vendor. Next comes Washington. In January 2026, U.S. Commerce Secretary Howard Lutnick threatened a 100% tariff on any Korean memory chips manufactured outside American soil. The Department of Commerce followed with a 25% provisional duty on advanced AI chips. Despite spending over $3 million on emergency lobbying, SK Hynix warns that tariff exposure could compress its HBM profitability by up to 5%. Across the sea, Beijing is mounting a state-backed assault. Fueled by a reported $100 billion national development program, China is building a domestic high-bandwidth memory supply chain. Changxin Memory Technologies has already accelerated mass production of HBM2, aiming to eliminate reliance on foreign suppliers by 2030. The strategic shield is cracking. These three forces are turning a position of dominant power into extreme exposure. The global AI ecosystem is working against its own supplier. The illusion of invincibility shattered on July 13, 2026. NVIDIA unveiled its Blackwell Ultra architecture, the B300 series. Packing 208 billion transistors, it promised massive computational power, but it also introduced a major architectural change: on-die memory pooling. For certain heavy AI workloads, this configuration bypassed the need for massive, external high-bandwidth memory stacks. The memory equation had changed overnight. The market quickly reinterpreted SK Hynix's entire demand outlook. Wall Street reacted with crushing force. Goldman Sachs downgraded the stock to neutral, warning of a potential 19% earnings dip in 2026 as competition intensified. Days later, Morgan Stanley issued an aggressive warning, projecting that global HBM supply would double by 2025 as Samsung and Micron qualified for NVIDIA's massive orders. The sell-off was swift. SK Hynix shares plummeted 9% in a single day, eventually sliding 11%. This crash was the deepest the company had suffered in months, providing raw, market-driven proof that the corporate story had shifted from growth to sheer vulnerability. The downside of the $26.5 billion gamble was now fully visible. The playing field was no longer a bilateral partnership. It was a three-empire standoff. NVIDIA was actively working to dismantle its outside dependencies. China was accelerating its domestic HBM program, and SK Hynix was caught in the crossfire, squeezed between its primary customer and state-backed rivals. The semiconductor champion was learning a cold, geopolitical truth. In the struggle for AI infrastructure, absolute leverage can disappear overnight. The battle for intelligence is no longer fought in software. It is won in the silent, hyper-guarded clean rooms of East Asia. On this shifting geopolitical fault line, memory is no longer just technology. It is sovereign leverage. What do you think? Drop your perspective below.